Now, while Amplats unions have called off their plans to strike just a few hours ago, Amplats' shares have fallen more than 5% to their lowest level since late 2005. Lonmin has, however, risen more than 3% after 86% of its workers reported for duty. To help unpack the mining distress is Cobus Nel, mining analyst at Stanlib. And, we spoke to you just about a week ago. You were standing by your cautious tone with regard to the mining stocks, that there was potentially more downside in the pot, and there you've got it, 5% off on Amplats. And with Bridget's view that we certainly aren't going back to 850 on dollar rand in the short term, that being an underlying barometer of the fundamentals, that we headed towards 10 on dollar rand, 980. News flow is not good, Cobus.
Yeah, certainly, and some people would say, some of these companies, miners, would benefit from a much weaker rand. And certainly, I've seen numbers, north of 10 rand to the dollar now. People are writing or putting on paper now, and certainly, it's an environment that's very disappointing, I think, at the moment from many aspects. We've seen this week, especially offshore sellers of SA mining stocks, in big volume. They really, I thought they probably just said this is enough. I guess companies losing some discretion over the allocation of capital is certainly not helping. And ultimately, if you don't have control over cost and your biggest component in your operations, which is labor, the tail risk is just massive.
Cobus, just on that point, I wrote a note to my clients a few months ago about this mining issue and said that we need to reset the paradigm insofar as mining is concerned in South Africa. Costs are just getting out of control, and nothing's changed in the last few years. Are we in a process where perhaps there'll be a catalyst that creates fundamental productivity change in SA mining compared to what we've been used to?
Yeah, look, something's got to give. I think we're certainly moving to a point now where things can't go on like this forever.
Yeah.
I think that is one sure thing that we know of. And certainly I think the companies are also looking to improve internally. It's gone are the days that you say we're going to just sit here and wait for the price to save us. So certainly I think it's firstly to improve the quality of their portfolios. I think there was a bit of a lack of discipline on many commodities we've seen in terms of capital allocations over many years. So they got to pull those back and improve the quality of the portfolio. And then one got to get back to a point where you say, we got to put some sort of incentive structure around performance on the mining front. We compete against global miners on the gold front. To give you guys an example, GFMS has come out with their numbers, and last year on average, our cost has been just north of $1,500 per ounce against the world or the global average of about $1,200 an ounce. So we are at a $300 premium per ounce cost here in South Africa. And if we're not going to become competitive and being able to change,
it's just not a sustainable situation.
It's not sustainable. There's going to be no place then for South African gold anymore in the global context. And platinum, people say, we're 80% of platinum, and even more of rhodium. Ultimately the users of platinum will have to pay what it costs. The problem is you're chasing people away from your product, incentivizing them to substitute, use other type of products, and actually destroy your demand for your commodity. So certainly, something's got to change, and it just can't go on like this.
Bruce, are you exposed to the miners? Or your clients exposed to the miners?
We've got our mining positions relatively small. Our biggest holding's been BHP Billiton, which has actually been a very good place to hide. I think we do have exposure to some of the platinum companies. Obviously, there's a lot of pressure on these, and I think ultimately I have to agree with Cobus. I think the mining, and if you've seen a lot of CEOs switching now and change, new management coming in, and I think the bottom line is what is very sad is the end result of what's happened here. There is only one outcome, and that outcome is assets to be reviewed. Those assets will be, the assets they'll start focusing on will be shallow, open cast operations, mechanizable operations, and slowly but surely what you're going to see is some of the deep level operations, unless they are hugely profitable with massive margins, they're going to close. There's no option. It's either the business will go bankrupt, which means everybody's lost their job, or you've got to go to a position where you can keep the business sustainable and profitable, and hopefully when things improve, you're able to
Cobus, on that point, bankruptcy. Is that the catalyst we need in this country?
We've heard now of Amplats, obviously, on the brink, I think, of bankruptcy. Certainly in this environment where where there's not enough place for the kind of production we are seeing at the moment. That's the bottom line. So be it companies that's falling over, be it some sections of mines or certain mines that are getting forced into closure, something's got to happen.
But could Amplats go bankrupt? Let's say, let's take a shot for it.
A huge company like Amplats.
I mean, I doubt. Obviously you've got Anglo American sitting behind them.
But those shareholders aren't going to carry on forever.
That's the question. I guess the big worry after the announcement we've seen last Friday, and again, some of the discretion has been taken out of management's hands.
The political pressure you're talking about now.
Yes. A equity provider will look at it and say, if I don't have control or full discretion, over the strategic nature of this capital allocation, do I still want to do this, or am I starting to fund something else here on the sideline, which is not my main aim? And we must remember, these guys got plenty of options globally. There's no assurance that, like you said, that these shareholders next time around will come and say, yeah, we will have to follow our rights because otherwise getting diluted. They may look at it differently and say, we can't afford to follow our rights anymore.
When you see this downside in a stock, for instance, Amplats, what do you do if you have held that position through the down cycle? What do you do now? Do you hold your position in the hope that it is going to turn around, or do you bail and take the losses on the chin?
Yeah. Look, certainly I think, maybe the first point on that, I think you've got to always evaluate the investment in terms of the future environment it presents to you today, i.e. the type of cash flows that you can expect as a shareholder going forward. That's the first important point. The second one is, a company like Amplats and even Impala and many of these other companies at these current share prices, are incorporating a lot of this risk. I think that's the second important point. So as they always say, if you want to panic, be first to panic. And I guess that's where you got to try and find a balance about trying to get out of a position.
So it's too late to panic now. Is that what you're saying?
Almost, I'm getting a sense of at 280 rand. Yeah, sure, it can go lower, but I mean, these assets are still worth something. That's what I believe. As long as there's cars that's going to be produced globally, the PGM basket is in demand.
But how can they be if you've got management who can't manage, workers who won't work, and you've got all sorts of other cost pressures too? It just seems to be a dysfunctional setup.
No, sure, and I guess
but I mean, platinum isn't going to be abolished from world demand. I mean, we're not going to see suddenly no demand for platinum.
I mean, you can only substitute platinum at this stage to some extent, all right? And we've all seen the focus on pollution standards and monitoring and controlling that globally. I think we've seen in China now, it's the continent with or the country with the highest vehicle.
I'm going to interrupt you. We've got Ryan from Cape Town on the line. Ryan, go ahead with your question for our panel. We've got just a couple of minutes left of the show. Ryan,
I believe
go ahead.
Can you hear me?
Yes, we can. Go ahead.
Okay. I believe Anglo American is trading quite a lot below book value. So if Anglo American is, then why couldn't Anglo American Platinum potentially be trading below book value? Because right now it's still at a significant premium to book value. That's my question. Thank you.
Quibus?
Yeah,
that's why you're here?
There's massive risk at the moment on the book value, the actual book value of Amplats, because if there's too much capacity and they need to close a smelter and they need to close more unprofitable mining areas, there's write-downs accompanied with that, So firstly, I think their book is vulnerable. As we've seen in Anglo American, I think from their perspective as well, their book is vulnerable to some extent. There's also some book value that they're carrying in diamonds, perhaps in met coal, that are also vulnerable. So certainly, I think, ultimately the book value for a share to trade or to be looking purely at the book values may be misleading. One's got to really try and unpack that book and see how much of the book is really productive and what is the type of returns, what's the quality of that book that you still have, and then make a call on what multiple you want to pay of that book.